All right, let's get some analysis. Stan Shamu joins us from IG in Melbourne. Stan, great to see you there. Just firstly, if we could ask you about your call for the ASX 200. What do you expect we'll see in an hour's time?
Morning, Brady. Yeah, absolutely. That Larry Summers news has certainly lit up the boards this morning. We've got our opening call up 1% to 5,273. Of course, on Friday afternoon, we actually lost quite a significant amount of ground, just on the back of reports suggesting that Larry Summers had been offered the job already. But of course, this has reversed quite strongly. And of course, with those losses mainly attributed to that headline on Friday, I think it's only warranted that we see a strong reversal this morning. Of course, last week we printed a high of 5,252, which was, of course, a new 5-year high. So we're set to smash that high at the open today. We'll probably start to look at 5,300 as the next key level for the local market. Of course, we will have a strong performance from the resource names and other cyclical names as they just respond to the buoyant risk sentiment across the boards. Of course, we've got gold names set to recover strongly after the precious metal was one of the biggest beneficiaries of that US dollar weakness this morning. We've got gold back up at 1,334, so this should support the likes of Newcrest and of course other smaller players which experienced sharp drops on Friday of around 7% and above. So it should be a fairly good day for gold names. Of course, those defensive names like the consumer staples and the healthcare names are likely to underperform after having seen a bit of a good performance on Friday as investors took a bit more of a defensive tone. But more worryingly, I suppose, is the fact that this Larry Summers news has come sort of in the twilight of markets when liquidity is relatively low. So some of these sharp moves might be a little bit overdone, and possibly we might see a little bit of stability in Asia and possibly a slight pullback in some of the risk assets from what we saw at the open this morning. Of course, we've got Japan out of action as well in observance of respect for the elderly day, so that will limit the leads as well from that front. And we don't have any local economic news as well to look out for, so we'll see if these gains are sustainable once real liquidity and real volume comes into the market. But for now, it does look like we're in for a fairly strong start.
But as you mentioned there, obviously with Japanese market close, I mean, how long do you think this can last? You talk about reaching that 5,300 point mark. I mean, what do you think are going to be the drivers? Do you think this news can carry through with regards to Larry Summers, or is there going to be caution creeping in ahead of the Fed meeting?
Yeah, well, at the moment it's all been about futures trading, and of course that sharp rise in US futures is what's been driving the SPY futures, and of course the local market call higher. So it really depends on whether or not, I mean, of course we don't have much company news these days, but it really does depend on whether or not investors are happy to keep driving the market higher at such elevated levels, particularly ahead of a significant event risk coming up this week. Of course, we've got the US FOMC meeting on Thursday, where a lot of analysts think we'll hear at some level of a token tapering, I suppose, of about 10 billion of the current rate of purchases per month. So such a reduction probably won't do much for sentiment at the moment as is expected, although analysts are still quite divided on the composition of the tapering. So that might be what might make a difference. We'll also have emerging markets back in focus. We've got rate decisions for India, Turkey and South Africa as well. So they could come to the fore and throw a little bit of confusion into the whole mix of things. But for now, it does seem like the risk sentiment is positive. Whether or not physical buying will continue to push the local market higher is still a little bit debatable considering the cautious tone ahead of the Fed.
Just on the FX markets as well, the big reaction that we've seen there, obviously that US dollar weakness. What's your view? I mean, is it all about the view that Summers was perceived to be more hawkish than Janet Yellen?
Yeah, absolutely. I think Summers has made a few throwaway comments in the past just regarding his, I suppose, regarding the fact that he's not too happy with the current quantitative easing program. and of course he was more inclined to a sort of tighter monetary policy as opposed to what Bernanke has been running at the moment. But of course Janet Yellen's probably the second best candidate out of what most analysts were expecting as the current vice chair. She's a little bit more aligned to what we've already been getting from Bernanke, so I think the market's very happy about that. At the same time, we've got the Syria issue looking like it's well concluded now, so that's a little bit of a positive kicker for risk as well. But we've really seen some big moves, particularly in the risk FX space, with the Aussie dollar coming within striking distance of 94. We've got the pound versus the US dollar trading within a striking distance of 160, which is of which it last traded above 160 in January this year. So there's certainly some very amicable moves in the FX space, and of course the dollar yen's been on the losing end as the US dollar loses ground. The dollar yen's dropped below 99. I think it traded about 99.38 this morning. So all up, it does look like risk is set to continue benefiting in the short term, but it's now starting to test some key resistance levels, and we'll have to see a little bit more evidence of what exactly is pushing this risk sentiment this much higher before a lot of investors continue to commit to longs on that front. But I think with China out of action as well on Thursday and Friday, leads are very limited. But for the Aussie dollar, we've got the monetary policy meeting minutes due out tomorrow. They might shed a little bit more light on what to expect from future rate cuts, and that might be potentially a trigger for some profit taking in the short term on the Aussie dollar as well. But we are likely to continue to see some volatility in the FX space in the short term.
And just quickly, you mentioned there gold and how the gold miners on our market could recover strongly with the bounce back that we're seeing in gold right now. Do you expect this to continue, this push higher in gold in the short term?
Yeah, gold has certainly benefited from this short-term weakness in the US dollar. We've got the dollar index about to break the 81 level, so that's quite a key level for the greenback at the moment. Of course, with gold as well, it saw a massive rally from those lows at 1,180 all the way up to 1,434 a few weeks ago. And now over the past week or so, we have retraced about 50% of that move, came all the way back down to 1,307, and that's exactly where the gold bottomed at on Friday. This has seen it bounce back to 1,334 early in Asia today, but of course I think selling into strength is probably the most preferable strategy on gold at the moment, especially with tapering likely to looking like it's likely to be announced on Thursday. It really does put gold on the defensive, and potentially we'll see some profit taking in Asia, and this might accelerate into European trade as the cautious tone ahead of the Fed just continues to dominate markets. But for now, it looks like gold has enjoyed a bit of a bounce from those lows from Friday.
All right, Stan, really appreciate that. Thank you so much.
Cheers, Ray.
Stan Shamu from IG there. Now, in other news we're watching this morning, some foreign hedge funds are betting Australian banks will suffer big share price falls on a slowdown in emerging markets. The S&P ASX 200 Financial Index is up 32% over the past 12